I'd invest it in a globally diversified portfolio, following our asset allocations and our tactical tilts. So I think that is always the answer, irrespective of where the markets are. At the moment, what are the most attractive opportunities within that? I think European equities are our most attractive sector. In that, I like the domestically orientated European companies where you're not taking the FX risk. So that's the first one. The second one, I think, is the hedge fund space, and it's obviously a very broad space, but when you look at hedge funds, they've had a pretty average time over the last 5 years, and that's mainly because we've seen volatility sink now to record lows. What, the VIX is below 9 at the moment. So when you've got volatility at record lows, it's very hard for those managers to make too much money. But if you can eke out a return which is, you know, significantly above cash, and then you've got optionality if volatility picks up, the hedge fund space is certainly a good place to be positioned at the moment. And you have got downside, shouldn't say you have, you could have downside protection should we see, you know, the public markets turn down. And the third one is, I think, private equity at the moment, where, you know, you can still get double-digit returns in private equity without taking that public market risk, which is probably one of the biggest risks out there. So from that perspective, you know, the alternatives look very attractive to us, and European equities look very attractive. We were overweight US equities all of last year up until February. We took that positioning off and really switched that into European equities. So that's the three places as part of that globally diversified portfolio that I'd be looking at.